All right, guys, we got to talk. We have some really big bullish signals for crypto that just appeared. The last barrier before we get big rate cuts has been broken today. And that is CPI came in. Now, inflation did go up, and tariffs are the main cause, but it was well in line with expectations, so it will not derail our rate cuts. That's why Wall Street went up today, and crypto is sure to follow. Like I said, probably 25 basis points next week, but we're also likely to get 25 basis points in the next two meetings as well. So let's actually look at the financial report. So the consumer price index rose 2.9% on an annual basis in August 2025, the fastest pace of inflation since January. Tariffs levied by President Donald Trump seem to be putting upward pressure on inflation for goods like clothing and furniture, economists said. The Federal Reserve is expected to cut interest rates next week to help support a faltering job market. The risks keep inflation elevated. So obviously, inflation did go up by 0.2. It rose from a 2.7 in July to a 2.9 in August, but that's what was predicted, and it didn't go to 3.4, 3.5. So, it's not going to worry Jerome Powell too much, at least not yet, which means we are getting a cut. The main things that actually increased were apparel and furniture. And obviously that makes the most sense because a lot of those things are manufactured overseas. The tariffs obviously will affect those things. So they're saying that inflation is uncomfortably high and it's accelerating. Chief economist at Moody's, I think we should expect a further acceleration in inflation over the next 6 to 12 months. But that doesn't mean now. The readings now indicate that we need a rate cut, and Jerome Powell, even though he's been putting it off, is definitely going to get us a rate cut. And of course, like I said yesterday, the producer price index actually decreased in August, even though it increased 0.9, which is huge in July. So there was a big spike up in July, and then August kind of alleviated that. So we're definitely getting those rate cuts. So price for core commodities, which exclude food and energy, rose 1.5 in August from a year earlier, the fastest annual pace since May 2023. But if you actually look at the graph, we're basically back where we were in January in terms of inflation. Tariff policies pursued by President Donald Trump appear to be the main contributor to the rising inflation for goods. That's not a surprise. You tariff people, the importers pay the tariff and they have to raise their prices. U.S. entities that import goods from overseas pay the import duties. Companies will ultimately pass at least some of those additional taxes on to consumers, though the process will take many months due to various business strategies to try to blunt the impact. Although, as time drags on, they're not going to be able to absorb the costs. These are the highest tariffs since the 1940s. So a large share of clothing imported to the U.S. comes from Asian countries where tariffs have risen considerably. And tariffs are all over the place on apparel price. So if you're buying new clothes, which is a significant cost for some people, it's going to cost significantly more. There's going to be sticker shock for some groceries, including beef, because we do actually import a decent amount of beef. Fruits and vegetables also climbed a lot since January 2020. Now, I have noticed that, but frozen vegetables to me haven't really went up that much. Services inflation actually seems stuck, but they are actually lower. But what that means is a lot of the inflation is probably not going to come on until we already have the cuts. And obviously that's very, very good news for us because with more cuts and more inflation, which means that like I said yesterday, yield's going to be lower, inflation's going to be higher, so people are going to be forced into the situation where they have to find investments that beat yield, which means it'll force them out of bonds into more risky things like crypto and stocks. So it's a win-win for us. Now, crypto didn't react that strongly today. We're still at $114,000, but on another technical signal, we are getting very, very close to the 50 MA mark. The 50 MA is 114,548. At the time of this recording, the price is 114,470. We are $70 away from closing above the 50 MA, and that is a major signal. If we stay above, I think the 50 MA will turn back positive, And, you know, the last big dump we had back in February to August, not August, to April, the 50 MA didn't turn around positive for 2 months. But it's only been about 2 weeks, and the 50 MA seems to be on the verge of turning positive. And that means that, like, we're going to get out of this little dinky slump market and actually go up. And yes, there's going to be a lot of rampant speculation, but overall, the crypto market remains very, very healthy. Regulations remain very, very healthy. As Paul Atkins has said, he's not really going to intervene with crypto affairs unless it's massive fraud, which means he's really not going to intervene at all. And obviously, President Donald Trump's view towards crypto is very, very friendly. So we have a lot of bull signals, but there's a technical bull signal that if we rise and close $70 more, we'll actually close above the 50 MA, which is a big deal for a lot of technical analysis readers. Now, I don't really put too much stock in technical analysis, but some of these big signals are actually self-fulfilling prophecy, which means there's a lot of people that follow them and they will act accordingly to these signals. There's not anything physical in the market like a breakthrough in the system or something that causes this. It's just that a lot of people tend to follow the signals, and if enough people follow a signal, the signal tends to actually fulfill itself. If you actually look at altcoins, they're actually going up more than Bitcoin. Ethereum has done very, very well with respect to Bitcoin, up 2.46. And most altcoins are actually in the green. Now, Mantle continues to go up. I'm not exactly sure why. Ondo with the RWA is going to do very, very well as well. The other signal I'm looking at is the MACD. The MACD has turned positive. Actually, the MACD turned positive on September 5th or so. So the MACD has been positive for almost a week on the daily. On the weekly, I do believe the MACD is going to turn positive within like a week or two, which means that we're going to get out of the slump much, much faster than when we went to $75,000 early this year. So right now, it looks like the technicals are pointing up. The Fed's policy stance is looking up, and also big companies are still very bullish on crypto. So that's actually going up as well. So we have other countries like Kazakhstan that's going to introduce a state crypto reserve bill. The Reserve Bank of India, their national bank, says that crypto rules risk legitimizing sector, and I think like Indian people actually want that right now. So on a global level, signals are actually pointing up as well. Yes, there is going to be more of a prevalence of crypto scams, but that's just the price of having getting more acceptance. Now, we do need to fix that, but it's not a huge, huge problem. Stable coins are also gaining a lot of traction in cryptocurrencies, and that's a good thing because stable coins are often the onboard to a lot of crypto platforms. I think USDC, USDT is gaining more universal acceptance, and that's very good for us. We have more ETFs coming through. Just today, we had a Rex Osprey Dogecoin ETF come through. I don't know how much money that's going to attract, but there are actually like some institutions that are eyeing to buy Dogecoin. And folks, if they're eyeing to buy Dogecoin, you can bet they'll be able to buy or willing to be able to buy other coins as well. So some of these even big institutions are actually like embracing some of the speculation in chance for bigger gains, which is very, very good for crypto overall because a lot of crypto is actually based on the speculation. I do actually see some of the FOMO ramping up. I definitely see like some of the excitement coming back. The views on my personal videos in crypto have actually started to go up, and that's another signal I can look at myself. Now, part of that is just because I've made my videos quite a bit longer and they do better in the algorithm. But part of it is like I do see more enthusiasm for the crypto market. The overall live streams are actually slightly attracting a little bit more people. So you see all these like personal signals as well as the big signals. And the big thing is we crossed the last barrier to get our first rate cut. And that's going to be a huge, huge deal because, this is the last thing that people were actually afraid of. Both the CPI and the PPI came in pretty well. The PPI came in really, really well, but the CPI actually didn't blow everything up. So we get hopefully 50 basis points, because I think that would immediately rocket the market past 120. But even 25 basis points will make us rise to maybe like 115 or more. There is a chance that after the cut, there will be a slight dip. So prepare for at least 3 days to a week of a dip if that happens, and prepare some money for DCA if that happens. But after that small period, I definitely think people are going to realize that the Fed's going to cut rates, that money's going to flow over from the bond market overall, and that crypto overall, because of that, is definitely going up. And the signals all point to that. There is no denying it this time. I know there's still bears out there, but I think like with the MACD on the daily turning positive, with the with the 50 MA, actually we're going to close above the 50 daily MA. I think like there's really very little argument to say that crypto will actually go down, unless we get like some serious scam like Coinbase or Binance goes down or something tomorrow, which has a very, very small chance of happening. All the black swans are way out there in the distance. The Charlie Kirk thing does not impact the crypto market at all. The only thing that's maybe sort of concerning is that Russia's incursion into Poland, which is a NATO country with a drone, and NATO is deciding what to do with it. If that situation escalates, people can become very afraid and pull back on their investments, but I'm not really sure if that's enough to turn the market. I don't think it is. And after all, Russia didn't like send missiles into Poland or anything like that. And the Ukraine situation is what it is. That situation is not going to get cleaned up and resolved anytime soon. But I think the markets have long adjusted to that situation in the one in the Middle East. So I don't actually think anything is going to go down there. Now, like I said, if the situation with NATO and Russia escalates, that could change everything. I suppose that's the one thing that we could actually like really pay attention to, but that is highly unlikely. I think Putin is just kind of like limit testing on to see what he can actually get away with. But even he's not crazy enough to actually really start a war with NATO. Trump has hinted at some stuff, but I think that's mostly all bluster. I don't think he's actually going to do anything to Russia. He's trying like more roundabout methods, which means like he doesn't want to do anything direct. He doesn't want to impose sanctions on Russia. Even with that, he wants weirdly enough, for China and India to have tariffs because they buy oil from Russia, but he's not really willing to sanction Russia more himself, which is kind of weird, but that's just kind of how like international politics sort of works. So I'm actually overall extremely bullish on this situation. I've become even more bullish with the CPI report. I do understand inflation's probably going to go up to 4%, maybe even more over the course of the next year, but that is not directly within the next 3 months. And as long as we get those rate cuts in the next 3 months, inflation going up might actually get more people to leave the bond market and come into the crypto market, and that is trillions upon trillions of dollars. And of course, that's very good for our market. So prepare for major bullishness and major mooning in the months to come. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.